Okay, so if we looked at comparing a specialised finance broker and management rights against going to your normal mortgage broker,
Yeah.
most mortgage brokers have never heard of management rights, and you don't want to be their guinea pig.
You don't need any introduction. You've been around for a long time, over 2,500 managed rights. You've worked on in the last better part of a decade. I'd love to understand some of the reasons why people would choose to use a financial broker.
Thanks, Sid. So a bit of a background on myself. 16 years at the National Bank, and my parents got into management rights back in 2000, and I was in the bank at that time, and I helped them out and did their finance. And myself, my wife got involved with our parents' management rights, and I've been doing finance for management rights since 1998. I've seen the industry continue to flourish over the last 25 to 30 odd years. And through my experiences, that when people come and see me, I treat them as though they're my family.
Yeah.
And what would they need to know if they're going in to buy some management rights?
Great. Mate, what are some of the key benefits of using an experienced financial broker?
I see that there's some key benefits with experience, the knowledge that I've seen within the industry, speed of service. So if someone's ringing me or contacting me, I'm able to deliver some information to them quite quickly. I've got direct access to the relationship managers within the banks, and I'm there for the long term. So I've got customers that I've had for 20 odd years, whereas a bank manager, they're gone in 2 to 3 years, whereas I'm doing loans for the family and sometimes your own children down the track.
So what would you say the role of a financial broker is from start to finish? How do you take your prospective buyer on that journey, and what are some of the value adds you add to them along the way?
So one of the things that I first look at is what type of complex are you looking at? What is your budget? A lot of the time you need to know how much you can actually borrow and what is your maximum purchase price. Does that fit the type of needs that you're looking for? Do you need a complex that has a 3-bedroom apartment or 2-bedroom? Are you looking holiday or permanent? So we look at your own financial situation to work out how much can you borrow and what type of complex, and then looking at the type of work that you actually want to do. So through our own experiences, we've owned student, corporate, permanent, holiday, mixture, and everyone fits into a different building for a different reason. So one of the things that we initially look at is how much can you borrow? What are your repayments going to be? Are you looking for interest only, or are you looking for principal and interest? Some of the clients are looking at, can they borrow against their property, or do they sell their property to go into a much bigger complex?
Yeah.
So that journey is first discovering what can they actually borrow, to then going through and looking at the profit and loss that comes from the accountant. We're then looking at the different banks that are available to the finance, because not everyone fits into an individual
particular
bank
mold.
Yeah.
Or
So you might go, your requirements might be interest only, whereas some banks require you to go on principal and interest. It depends if you want to borrow against the equity. So we're looking at all those things to work out and tailor some products and the structuring. And I guess that's where we add value as finance brokers, is to ensure that the structuring of your new lending from the bank is going to be in line with what the accountants are looking for to give you the best tax deductibility on your interest.
Great. So Mark, I'm looking to buy a management rights or an accommodation asset somewhere here on the Gold Coast or anywhere in Australia for that matter. What are typically some of the costs involved, and how much deposit would I, as a new buyer with no experience, be required typically to purchase an asset?
The maximum loans that the banks can go up to is 70%. Therefore, the bank's going to lend 70%. You need to come up with 30% plus your associated costs. On most management right transactions, you need to allow 6% for your upfront costs. And those 6% generally covers your stamp duty, your lawyers, your accountant, your valuer, your bank, your license, your course, and your insurance.
So overall, probably 36% total with your deposit as a minimum.
Yep.
If we're looking at the 70% max lending, plus your 6% as actual costs of
Yep.
stamping. Yeah,
That's
great.
right. And you also need to have a bit of working capital, and that will dictate based on the type of complex that you're looking to buy. If you're buying a holiday complex, you're going to need to factor in a little bit of working capital to cover some of your cleaners until you can do the end of month rollover. Whereas in a permanent complex, you might only need $10,000 as
Perfect.
the example.
Yeah.
For your bit of working capital. On a holiday complex, I would say you might need $20,000 to $30,000,
Yeah.
depending on the size and the
Right.
outgoings you've got for that first month.
I mean, I guess there's a number of grey areas when you're having those conversations with potential purchasers, and obviously when you're putting a case to a bank. But very, very simply, and if we very broad and general, if you're looking at management rights per se, and we've got two main modules, you have the standard module and accommodation module. From a bank's perspective, is there any sort of lending differences or restrictions across both common modules?
So with the standard module versus accommodation module, you, the manager, will earn the same level of income. It's just how much has to be repaid back to the bank if you've got a standard module, which is a maximum of 10 years, and the accommodation can be up to 25 years. A lot of the time when you're looking to buy a complex, in particular if it's under an accommodation module, there might only be 17 or 18 years left on the agreements, and the banks are completely okay with that, even if it is up to 15 years on an accommodation module. The main differences are that you will pay back your debt a lot quicker under a standard module agreement against an accommodation module building.
So, long story short, an LVR ratio is pretty much the same, it's just the term of the lend.
That's right, yeah. So the bank wants more of that debt paid back over a quicker period of time. So what the bank typically does, where they might lend 70% overall, is that they break it up into two loans depending on the financier. The first loan is up to 80% against the manager's unit, with the balance of funding against the management rights. So as a split, for example, 80% against a unit, and it might be 60 to 65% against the actual management rights. And that loan that's against the management right business typically has to be repaid within the term of the agreement. So if you've got a 10-year agreement, the bank wants a fair chunk paid back over 10 years. If you've got a 15 or 20-year agreement, the banks will typically or give you up to interest only for, say, 3 years. But ultimately, they want that debt paid back over a maximum period of 15 years.
Perfect.
So even if you've got 25 years, the bank's still assessing that at 15 years as a maximum term.
Great. So I'm putting myself in the buyer's shoes. So if I'm preparing to apply for finance, what are some of the things that banks see favourably, and what are some of the things that perhaps the bank goes, oh, we're not too sure about this, or we need a bit more information? Some of the do's and don'ts when applying for finance with a bank.
So one of the things that we do, Sid, is that we look at your assets and liabilities, and we look at your working backgrounds, and the banks are looking at, well, what are your skill sets to go into a management rights? And they're looking at transferable skills, in particular if you're going into a holiday complex, because they want to know that you've got those skill sets to be able to run a complex. The things that the banks are looking for are details of your assets and liabilities. If you've got a rental property, if you've got leases on motor vehicles, they want to know about your credit card liabilities or any afterpay.
So for preparing a financial statement, a health check of your own finances before going to you is going to be helpful.
That's right. So one of the things when they look at, and to improve your borrowing power, it might be, can you reduce your credit card limit, or can you get rid of your car lease? Because those things do have an impact on your maximum borrowing power. So getting rid of them might be an advantage, but they're the things that we talk about when we have those meetings and discuss what are your products that you need and what are your products that you're looking for, because they can be two different things.
Yeah, great. And I know you could probably sort of, I'll digress a bit. I know you could probably talk all day on this subject, syndicates and partnerships. You're probably renowned as one of the country's leader in partnerships and syndicates and putting them together and giving the correct financial advice. What's the general overview? Why are people looking at this as a viable option when getting into management rights or any accommodation asset?
So a partnership has been around for a very long time, but the partnerships in management rights started around 20 odd years ago, and it came about by combining the resources of an active manager and a silent investor to buy a much bigger building than they could on their own. And as the industry has evolved and the buildings have become bigger, it now allows us to join forces with a number of investors. So we might see some partnerships that have got anywhere from 2 to 15 investors to allow each partner to buy a much bigger building. As an active manager, they're living on site. They're doing the job. They're cleaning the pool, mowing the grass. They are receiving a management fee from the partnership to run the complex. They typically live on site in the manager's unit. And then the investors are receiving a dividend every month, typically, based on the profitability of the business. We've seen the industry in partnerships flourish, and I'm an investor myself in a number of buildings, and the returns can be quite good. One of the things that we need to look at when you become an investor is the income from the management rights your sole source of income to buy food? And we've looked at, it's probably not the best idea if the sole source of your income is coming from a management right investment against it being a supplementary income.
Or a passive.
So some people have invested also through self-managed super funds. There's some rules and compliance that we've got to adhere to, but it has become quite profitable to invest via super funds, but everyone's got to seek their legal independent advice.
Yeah, I think it's great. I think you could talk all day on this subject because it can be so in depth and there's so many variables and there is a bit of grey area if we don't sort of delve into the risks. But I think in our industry, accommodation and working with industry experts, there's got to be a connection there. There's got to be that something that draws you to using that person or their services. And I think from a financial broker, what would be some points or tips that you could have and you could provide that might be your point of difference that may be not an industry standard?
Okay, so if we looked at comparing a specialised finance broker in management rights against going to your normal mortgage broker, most mortgage brokers have never heard of management rights, and you don't want to be their guinea pig to try and get the finance.
No one does, do they?
I've done approximately 3,000 management right transactions over the last sort of 20 odd years, and that's given me the experience and knowledge to ensure that we're getting the right structuring, the right advice, the right amount of lending in a timely fashion. Because when you sign these contracts, you've typically only got around 45 days to get your finance, so it's imperative that we're getting the right level of finance from day one. And I think that's where we add value, and especially having ownership of the management rights. It's not just the finance that I do, it's helping you through the journey. Because there's going to be a lot of obstacles that you don't know about until we're there. And my role is not only to help you out with the finance, but it's also to help you overcome those obstacles.
And that's also where I come in as well. I can also handle a lot of the curveballs that may get thrown in any transaction because of experience and trends in the industry, but also the different asset classes and what might pop up under due diligences. So yeah, very, very good point. Now, give us 3 tips when someone's going to use a financial broker or a finance broker. What is it that you would sort of recommend, your 3 tips from anyone coming into the industry for the first time?
Know your borrowing power up front, because there's nothing worse than wanting to buy a complex that's worth $2 million when you can only really afford $1 million. So know your borrowing power up front. Be reasonable, or get a valuation done on your own property if you're going to borrow against your property. Don't trust the guy down the road who told you that it's worth X dollars, but the real valuation is a lower figure.
Get an appraisal maybe from a real estate agent.
Or a valuer. A lot of the time we can organise a valuation at no cost, because it's important that you know where your budget is. We also just work out what type of complex are you looking at, and look at what are you selling down the track, whether that be 3, 5.
How liquid.
And do you have a saleable asset, or is it something that you are looking to buy that you can really improve on to make a very good capital gain?
I typically, I'll add one more thing to that, to have a 4th point, is always position yourself at the end of your business journey and see how that looks for you on the exit. You know, when you're thinking about buying, always have an end goal and work backwards from that point. I think you're always going to set yourself up for success. One other thing, we don't talk about it too often, but who pays for your fee? Mark, who pays you?
So I'm paid by the banks when I arrange finance. there's no extra costs going through a specialised finance broker like myself. What we offer is obviously a tailored sort of suite of products that the clients can access, but we are like a business development manager for each individual bank. Therefore, we've got buying power when we go to the bank against you trying to go in and directly get the finance. So when I apply for a finance through a number of different banks, they know I'm going to shop it, and they want to win
Put their
that
best
business.
foot forward. Yeah, absolutely.
So I can sometimes get a better deal than you can individually, but there's no cost to you, the client, for organising a finance for management rights or a home loan.
Perfect. Mark, I want to sincerely thank you for your time today. I know how busy you are. Always a pleasure talking to you. Obviously, if anyone needs to talk, they know where to contact you, phone, email. But really appreciate your time. Thanks very much. Good on you.
Thanks.